In this video, I will show you the only Forex trading indicator you'll ever need to take your trading to the next level and be ranked among the top 1% of successful traders in the world. Just adding this indicator to your trading chart can allow you to eliminate a lot of bad trades, tell you the perfect time to enter, stop you from closing out all the winning trades too early, and make the chart reading a whole lot easier. In summary, this powerful trading tool will make trading a whole lot easier. Before we can reveal more, we first must understand what a Forex indicator is and how it makes trading easier for us. Without that prior knowledge, then you wouldn't be able to unleash the full power of the tool I'm about to reveal to you later in this video, let alone know how to fully use it. So without further ado, let's get into it. First of all, we need to understand what is a Forex trading indicator. A Forex indicator is a tool or mathematical calculation used by traders to analyze and interpret market data, identify trends, and make informed trading decisions in the foreign exchange market. These indicators are applied to price and volume data to derive insights into potential market movements. Forex indicators fall into several categories, each serving a specific purpose in helping traders analyze market conditions. Here are some common types of Forex indicators. A moving average smoothens price data to create a single flowing line, helping traders identify the direction of the trend. Moving average convergence, divergence. MACD measures the convergence and divergence of two moving averages to identify changes in the strength and direction of a trend. In addition to being a trend indicator, MACD can also function as an oscillator, as it includes a histogram that reflects the difference between the MACD line and the signal line. Relative Strength Index, RSI, measures the speed and change of price movements. It is often used to identify overbought or oversold conditions in the market. Stochastic Oscillator. This indicator compares a closing price to a price range over a specific period, helping traders identify potential reversal points. Bollinger Bands. The Bollinger Bands consist of a middle band being an end-period simple moving average and upper and lower bands representing volatility. Average True Range. This tool measures market volatility by considering the average range between the high and low prices over a specified period. Commodity Channel Index. This measures the current price level relative to an average price level over a specified period, indicating overbought or oversold conditions. Support and resistance indicators. Pivot points. Pivot points help identify potential support and resistance levels based on the previous day's high, low, and close prices. Fibonacci retracement. Based on Fibonacci ratios, this tool helps identify potential reversal levels by plotting horizontal lines at key Fibonacci levels. These indicators are used in conjunction with technical analysis and other tools to help traders make informed decisions about when to enter or exit trades. It's important for traders to understand the strengths and limitations of each indicator and to use them as part of a comprehensive trading strategy. Before we continue, I want you to take a moment to like the video and comment below which indicator is your favorite and why. I will be looking forward to seeing those comments, as I do know that there are a lot of good indicators out there, but just not popular. Now that you've gone and helped the algorithm recognize this video, let's look at how to use a Forex indicator. Using a Forex indicator effectively involves understanding its purpose, interpreting its signals, and incorporating it into a broader trading strategy. Here's a general guide on how to use a Forex indicator. Start by thoroughly understanding the specific Forex indicator you plan to use. Know its calculation method, the underlying theory, and the information it conveys about the market. Choose the appropriate time frame for your trading style. Different indicators may perform differently on various time frames, so ensure that the chosen time frame aligns with your trading goals. Consider using multiple indicators that complement each other. Combining indicators can provide a more comprehensive view of market conditions and increase the reliability of signals. If you're using trend indicators like moving averages or trend lines, look for the direction of the trend. If you're using oscillators, watch for overbought or oversold conditions that might indicate potential reversals. Confirmation with price action. Use the indicator signals in conjunction with price action analysis. Confirming signals with other technical analysis tools, chart patterns, or support resistance levels can strengthen the validity of a trade setup. Risk management. Implement proper risk management strategies. Set stop-loss orders to limit potential losses and determine position sizes based on your risk tolerance and account size. Backtesting. Before applying an indicator to lev trading, consider backtesting it on historical data. This helps you understand how the indicator would have performed in the past and gives you confidence in its effectiveness. Stay informed. Keep abreast of economic events and news releases. Some indicators are sensitive to economic data, and unexpected news events can impact the market, potentially affecting the accuracy of your indicators. Adjust settings if necessary. Many indicators have adjustable settings, for example, periods for moving averages and sensitivity for oscillators. Experiment with different settings to find the configuration that best suits your trading style and the specific market conditions you are dealing with. Continuous learning. Forex markets are dynamic and conditions can change. Stay engaged in continuous learning, adapt your strategy as needed, and be open to refining your approach over time. Remember that no indicator is foolproof, and it's crucial to use indicators as part of a comprehensive trading plan. Emotional discipline, proper risk management, and a clear understanding of market conditions are equally important in successful Forex trading. Additionally, it's advisable to practice using indicators in a risk-free environment through demo trading before risking real capital. Now that we have an understanding of what Forex indicators are and how useful they are to one's trading, the indicator that I am about to reveal to use is simple yet complex. Traders and profitable traders, I present to you the trend color indicator made for the MetaTrader 4 platform. What this bad boy does is simply change the color of the candles to represent the market's respective trend. I know it sounds simple, but believe me when I say that this little tool, as simple as it is, can help you find more profitable trades while avoiding bad ones. Allow me to explain some of the key benefits of applying the trend color indicator to your charts. The market trends and strength of the trend are color-coded. As you can see, a slight push to the up or down sides has a lighter color when compared to the stronger trends. Seeing the color change means that you need to be mindful and make the necessary preparations, such as breaking even your trades or claiming some profit in the unfavorable scenario that the market goes against you. You are now able to easily identify the direction of the market, because each trend has its respective color. This can help you control your emotions, especially your fear of the market. Experienced traders like to stock trades, meaning entering more traders as the markets continue to push in their direction. With this nifty little tool, you can know that the market is in a strong trend and enter more trades, while managing the trades when the candles change to a lighter color. I only recommend practicing this when you are comfortable with the indicator and you have adequate experience with trading. If not, then just leave this one to the pros. Oftentimes, candlesticks can give a false impression that the market is reversing. Of course, with the trend color, that can be alleviated because regardless of whatever candlesticks are being formed, until the market gives a clear indication that it is changing trend, the colors of the candles remains the same. Finally, probably the biggest advantage of this indicator is that you can use it to determine if it's time for you to cut your losing trade short and/or let your winners run. For example, if you are in a buy trade and you see the color of the candles start indicating a possible change in trend, then you might want to consider closing the trade. However, if you see the color of the candles start getting darker, it means you are on the right side of the market and you can expect this trend to go for a while. Now for the main question everyone's asking, how do you get your hands on this fabulous tool? Well, that's simple. Just go over to our channel's home page. In the description of our channel, you'll find the link where you can download the indicator. Once downloaded, open your MetaTrader 4 platform. Once launched, go to File. Open Data folder. Then click on the folder that says MQL4, and now look for the Indicators folder. Open it and then copy and paste the trend color indicator in said folder. Once that is done, close the folder and relaunch your MetaTrader. Press Ctrl-N and you should see a sidebar populate at the left side of your MetaTrader. Look for the icon that labels the indicator, and once you click it, it will display all the indicators that you have in your folder. Just look for the one you need. In this case, it would be our trend color indicator. Just drag and then drop it on the screen. And just like that, you've added the trend color indicator to your charts. All that's left is for you to change the respective colors of the trend as you see fit. However, I would not recommend changing the settings though. Do so at your own peril. If you found this video helpful and want to learn more about mastering the Forex market, Be sure to hit that subscribe button to join our community of aspiring traders. We release lots of valuable content like this, so don't miss out on any of it. Thank you for watching.